Alright guys, so let's talk about the financial war between the US and China. Now things on the trade front is silent, but the big confrontation is still happening. Now Trump wants to reshore industries back to the US, and his go-to strategy is a global tariff war to frighten companies to build factories in the United States. But the last few weeks taught the White House a very important lesson. There's a limit to how much you can push the world before your own bond market collapses. However, make no mistake, the US and China, they are still at an impasse. Washington has just been jawboning the world without any real substance to the tariff cut.
The president was ambiguous about it. Scott Bessent seemed to suggest it wouldn't happen until negotiations are at least underway.
Let me be clear. There will be no unilateral reduction in tariffs against China. The president has made it clear China needs to make a deal with the United States of America, and we are optimistic that will happen. And when that continues, it will be up to the president what the tariff rate on China will be. But we certainly need to see a reduction in tariffs and non-monetary tariff barriers from China as well. And we also need to continue seeing these companies abroad return their manufacturing to the United States of America, so we can shore up these critical supply chains.
Okay.
Now, in order to reshore industries back to the US, it's going to take more than tariffs. And that's why Trump is moving to extend his tax cuts as an incentive to get companies to reshore. Now, in 2017, Trump reduced the corporate tax rate from 35% down to 21%. And to bring back manufacturing, he has announced a further tax cut from 21% down to 15%. That's the plan. Now, this is definitely one way to attract companies to the US. Every business out there, they want to pay fewer taxes to keep more of the profits. But can the US actually afford this stunt? Now, the total cost of the tax cuts exceed $9 trillion over 10 years. That is an additional $900 billion in deficit spending every single year starting in 2025. How is the US government going to fund it? Doge is not working. Elon Musk is running all the way back to Tesla. So we are back to Scott Bessent issuing a ton of bonds to fund the tax cuts. Now the whole idea of the economic chaos was to crash the stock market to get money to hide in bonds. On paper, that would push down bond yields to help US borrowing costs take a breather, but the reverse happened. People lost faith in US markets, and the economy as a whole, they ran away from the bond market as well.
What happened in the bond market overnight, the spike in yields on the 30-year and the 10-year bond, which showed that people were dumping our bonds. And who were those people dumping our bonds? Japan, the biggest holder of bonds, was selling bonds. If you have a mass sale of bonds, that means people are losing confidence in the U.S. economy, on the ability to do deals with us. This is what forced the hand of this 90-day reprieve. Now, is it a good thing? Are people coming to the table? Yeah. But if you read between the lines, or not even what Scott Bessent said, we have no deals.
This puts Bessent in a very awkward position. The bond market is already showing signs of a foreign demand crash. While local Americans, they are buying more of their own bonds, big players around the world, they are shying away. The recent auction of the 5-year note saw the US borrow money at nearly 4% yield. But this wasn't a great auction result. Dealers bought less than the US government. Why? Because their customers like pension funds and hedge funds, they are buying less. But look at the demand from international buyers. The 6-month average came at around 70%. However, buying came in at only 64%. Foreign demand is not as robust as before. Seeing this, there's a limit to how much bonds Bessent can actually issue without breaking the bond market again. This isn't ideal when you are fighting a trade war with China, who has a very large war chest. We have spent a lot of time talking about supply chains and industrial subsidies, but where do you get all the money to fund all these activities? You get it from the bond market, and this is where China holds a big advantage over the US. Now, since the tariff war started, investors have been piling a ton of money into Chinese bonds. China's 10-year yield went from nearly 2% down to under 1.7% again. Remember the relationship. When bond values rise from demand, yields go down, and this allows the Chinese government to issue debt and raise capital at much cheaper rates than the US. Ironically, Trump's tariff war made Chinese bonds great again. It actually became a safe haven demand, safe haven destination for investors. Now for Beijing, this is great news. But for the US Treasury, this is horrible news. Suddenly, fighting a subsidy war with China becomes much more expensive. And that's why Bessent just put out his latest card to contain China. And this time, it has nothing to do with any tariffs or sanctions. Instead, Bessent gave another demand to multilateral banks not to loan Beijing any money at all.
Going forward, the bank must set firm graduation timelines for countries that have long since met the graduation criteria. Treating China, the second largest country in the world, as a developing country is absurd.
Now, the economic war today is getting down to the nitty-gritty details. Even the issuing of loans is now becoming an angle of attack for the US administration. When fighting a subsidy war with Beijing, there are two ways to go about it. You either ramp up your own borrowing, or you make sure China drops theirs, and it's obvious that Bessent has chosen the latter. Now, Bessent just met with Masato Kanda, the president of the ADB, All Asian Development Bank. At the heart of the talks was China once again. It's like Beijing lives rent-free in Bessent's head. He wants the bank to put China on a clear path to graduate from ADB borrowing. In other words, for the bank to stop issuing loans to China. Now, to be honest, this step was rather predictable, but it opens up a whole can of worms and invites retaliation from China down the road. Now, the ADB is a multilateral bank and its purpose is to support economic development in Asia Pacific. Now, just think of it as a big regional bank where the loan recipients are countries and not individuals. Now, the loans are used to help develop Asian economies, and this can be money used to fund government projects like a power plant or tied over a period of crisis. Basically, the bank is a provider of capital for Asia. The US today has a big influence in the ADB. Together with Japan, they hold 15.6% of the total shares each, making them the largest shareholders. In contrast, China is only a minority shareholder with a 6.4% share, and that's why Bessent is busy talking with the Japanese to corner China to stop Beijing from using the ADB as an avenue to get loans. Which is weird because the ADB is not a charity organization. Countries that loan from the bank, they take a loan, they still pay interest on the debt and shareholders still benefit. And here's why Bessent wants to close China's borrowing window from the ADB. Now, the bank allows China to borrow money at a cheaper rate, often on par with the US Treasury itself. And let's say Beijing wants to borrow US dollars from the bank for 10 years. After adding up all the rates and borrowing costs, the interest to be paid is 4.4% per annum today. Now, the 10-year Treasury bond today yields around 4.24%, and this puts China's borrowing rate from the ADB almost on par with what Bessent has to pay to fund the US deficit. Remember what we said earlier, if you are the US, the strategy is to raise borrowing costs for Beijing. So it should be expected that the US would squeeze China's access to all these multilateral banks. Now, without a doubt, China benefits from this arrangement, and we need to look at things from China's perspective. There's a huge advantage to taking loans from the ADB and other multilateral banks, and that's why the US is hopping mad. Because they hold the reserve currency, their borrowing terms aren't as flexible as China. Now, there are three reasons why China loves the ADB. Firstly, it allows Beijing to diversify their sources of liquidity. They can issue their own sovereign bonds or get loans from multilateral banks. It's just like shopping for the best product. China will simply go for the loan that has the cheapest borrowing costs. Secondly, it allows China to get arbitrage funding for BRI projects. Basically, it's a spread trade for China. They can borrow at say 4% and loan money to fund projects at 6% or more to riskier countries. Thirdly, it allows China to preserve their trade surplus and reserves, and just in case there's a need to strengthen their currency, they can deploy their dollar reserves while still taking a loan out there. And that's why Bessent can't stand the arrangement. It allows China to compete on the financial front with the US. And here's the funny part, China is actually using G7 money to fund their own economic progress. So in a very twisted way, the US and the West, they are actually helping to grow China's economy. It's really hilarious when we dig into the details. Looking at non-borrowing shareholders, 27 countries make up 67% of the total shares. This includes developed Western economies including Germany, France, Canada, and the US. Now, these countries don't take any loans, they just contribute money instead. However, China, who is a shareholder, also takes loans. So, in other words, Beijing is making full use of their membership fee. They are maximizing their country club membership. China is basically using the combined savings from the West to get cheaper loans to fund their companies and projects. So, in that respect, we kind of understand why Bessent is angry, why Bessent is right about Beijing having an advantage. But here's why the US is really furious about it as well. It's because their own borrowing costs are extremely unstable. There's a reason why Trump went after Powell. It's because rates are not coming down fast enough. During the bond meltdown, we saw yields on the 10-year spike to above 4.5% and the 30-year went above 5% at one point. This is an incredibly unstable bond market, but it is the only avenue the US has to borrow money. And now there's a trifecta of problems weighing down on the economy: a trade war, uncertainty from Trump, and higher rates. And that pushes down economic growth and, ironically, puts further upwards pressure on US Treasury bond yields. China doesn't have that problem because even though they are borrowing in the same underlying currency, they could actually pay a lower cost of borrowing. And we are seeing this play out in the global debt market. Now, in April, China issued nearly 50% of all emerging market dollar and euro bonds, but pay attention to how much they were paying. Unlike other countries, China is actually borrowing money at a cheaper rate than Bessent himself. They are borrowing at 26 basis points cheaper. So if the US has to borrow at a rate of 5%, China can borrow the same amount of money for the same duration at only 4.74%. This is crazy because it shows that the world has more trust in China to pay back the debt. This poses a big problem to US capital markets. If China starts issuing more dollar bonds, they can compete with Bessent directly for capital. It might force buyers to demand a higher yield from the US. Now, it might get a little confusing here. Why does the world bother buying Chinese dollar bonds? Why not just buy from the issuer directly, which is the US, and get a higher return? Now, firstly, countries get to diversify their dollar investments, especially to avoid sanctions and confiscations. Countries in the BRICS might feel safer buying Chinese dollar bonds than from Washington directly. And if demand for Chinese bonds go up, there could also be capital gains to be had. It's not just the bond yield you can enjoy. The more Trump launches his trade war, the more countries will turn away from US debt. Lastly, countries might want to fund China's growth to help them grow. It's like funding your ally instead of the US, who's trying to contain your economy through tariffs. Chinese dollar bonds allow countries to align closer with Beijing but still get dollar returns for their liquidity needs. It's a practical avenue to still play within the USD system but not benefit the US Treasury. And this is why China's dollar bond sales have such a big demand, enough to push their yields down. As Bessent himself says, we need to understand how the market works. And let's end this with his marketing pitch. Sounds like he's really trying to sell a course. It's hilarious.
Everyone should care about financial literacy, whether you are a student with a summer job or a part-time job during school, whether you're in college, whether you're starting your career, or whether you are at the end of your career. Making good financial choices creates economic security, and look, it's fun. You learn about the markets, you learn how to properly allocate resources, and there's a big payoff over the long term for something you can do early in your career.
But let me know what you think. Will the bank really stop lending China money? And will it even make a difference at this point? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.